Welcome to this week's Gold Explainer. Listen closely, because something massive is building. Retail traders are totally blind to it. They're trapped in the completely wrong narrative. But institutional order flow reveals a different story. We're trekking an aggressive, massive market shift. Smart money is engineering a brutal trap right now. Stick around, or you'll miss the real story. Let's see what smart money is actually doing. Just look at the sheer scale here. 223,806. That's a staggering number. Swap dealers hold an absolute mountain of short contracts. Smart money pivoted aggressively this week. Retail traders, they're blindly buying the dip. They genuinely think they're catching a bottom. Meanwhile, institutions are loading heavy, massive shorts. They're prepping for a violent drop. This isn't just a slight portfolio tweak. This is a monumental shift in market direction. This creates a highly dangerous market disconnect. Most retail guys think gold is super cheap. They see red candles and scream bargain, so they blindly buy without checking the flow. But what are the big players actually doing? They're aggressively distributing positions into this retail strength. They're actively offloading onto unsuspecting retail buyers. Honestly, it's a textbook distribution phase. Let's break down the commitment of traders' data. We've got a massive, glaring divergence right now. Managed money is stubbornly holding huge long positions, but swap dealers have completely overwhelmed them. They are packing on aggressive short positions. Swap dealers aren't just hedging their risk anymore, they're actively distributing across the board. Their primary goal is trapping these retail longs. They are building a massive ceiling above price. This data perfectly confirms those institutional footprints. The official CFTC report utterly exposes the trap. Notice that staggering net short position right there? This confirms absolute, unwavering institutional bearish conviction. They are heavily positioned for much lower prices. They are in total control of the order flow. Big players don't position like this without targets. The smart money intends to drive price down. Now we have to observe the macro context. Gold is down significantly on the week. We're seeing broad commodity weakness almost everywhere. Capital is rapidly rotating out of safe havens. The US dollar is showing relentless sustained strength. This macro flow perfectly aligns with institutional shorts. Risk-off sentiment is building rapidly globally. This fundamental backdrop fuels a major technical breakdown. So, how does this translate to the chart? We need to shift gears right now. Let's apply smart money concepts directly to price. This lets us see actual institutional footprints. We are shifting from guessing to tracking order flow. This is how you trade like a true professional. We must find exactly where algorithms are looking next. Let's establish our absolute top-down structural bias. Gold is entrenched in a vicious bearish trend. We're seeing aggressive lower highs and lower lows. Heavy distribution hit all the previous premium peaks. The structural weakness here is completely undeniable. The path of least resistance is heavily down. We must align with this dominant higher time frame. Fighting this institutional trend is pure financial suicide. Now let's map out the 4-hour battlefield. We have a clear premium fair value gap above. That's a massive imbalance needing efficient filling. And directly below us, the ultimate draw on liquidity is resting right there. Millions of retail stop losses sit below those lows. That resting liquidity acts like a massive magnet. Algorithmic targeting loves these sell-side pools. This brings us to the week's most critical question. Where is smart money specifically targeting next? With heavy shorts, they definitely aren't guessing. They need a specific schedule to engineer liquidity. They need a major catalyst to move the market. They need an excuse to expand price lower. Algorithms demand a high-volume event to hide their footprints. Enter the classic Judas swing. This is a highly deceptive, false directional move. Institutions use it to trap impatient retail traders. They'll likely push price up early this week. They want retail to think a bullish reversal started. They want to deeply tap that premium fair value gap. Once retail buys in, institutions aggressively drop it. It's a highly engineered trap to steal liquidity. Look closely at this week's economic catalyst map. The macro timing is absolutely perfect right now. Wednesday gives us critical ISM manufacturing data. Then Thursday brings the heavy hitter, non-farm payrolls. These are your ultimate market volatility catalysts. This is exactly when a liquidity sweep happens. Institutions use this scheduled news to hide their tracks. They need sheer volume to execute massive short orders. Let's walk through the day-by-day institutional forecast. Monday is strictly for slow consolidation and thin volume. Please don't force any emotional trades here.
Tuesday and Wednesday represent the core manipulation phase. Expect aggressive false breakouts, building up retail liquidity. Then Thursday, the high-impact NFP data hits. That is your explosive, decisive expansion phase. That's when algorithms rapidly clear out the lows.
So how do we actually execute this trade? We must transition from analysis to a concrete edge. You need to trade exactly like a professional. You must leave the reactive retail mindset completely behind. We will execute strictly on proven algorithmic logic. We'll let the trap unfold naturally. We enter only when smart money shows their hand. Here is the exact institutional setup for the week. Our absolute primary directional bias is a sell bias. The precision entry zone is the premium fair value gap. Your strict stop goes above the recent 4-hour high. Target 1 is the nearest internal liquidity void. Target 2 is the major sell-side liquidity pool. Target 3 is the ultimate weekly structural low. We are systematically targeting those resting sell orders. A decisive 4-hour close above 41.50 completely invalidates this entire bearish setup. Remember this profound insight when you watch the charts. Retail traders react to price. Institutions react to liquidity. If you're only reading candles, you're seeing half the story. Stop chasing erratic price action every single day. Start hunting for where the resting liquidity lives. That is the only way to trade alongside algorithms. Price moves toward liquidity, not your opinion. Do not miss out on this week's volatility. Something absolutely massive is coming very soon. To follow future opportunities, open your trading account today. Just use the link in the pinned comment below. Make sure to subscribe for our next explainer. Leave a comment with your trading plan below. Get ready for NFP to hit the market. Trade safe and execute like a complete professional.